Malaysia is around the same price point, except that they offer 100 megabits.
Mm.
So that's one way also that we will progressively increase revenues by adding more bandwidth to the offerings because customers need it anyway. By the way, if you bought, I don't know if you bought a 4K TV lately, if you do a lot of Netflix, oh my God, one 4K stream, it's 20 to 30 megabits easily. So 25 is not going to work.
And that's when Warburg said, okay, we will help you. We will sell that a portion of our stock to fulfill the requirements. So this is not an exit event for Warburg.
Mm.
This is a financing event for the company. And Warburg will say, our largest shareholder, largest institutional shareholder after the IPO, they continue to have a board seat. They're very involved. I think if they had a choice, they would not sell a single stock. But given these requirements, they need to facilitate the trade.
Hi everyone, so we are in part 2 of our deep dive session with Converge ICT COO and their Chief Financial Office Advisor. In this video, as what I've mentioned, we're going to talk about valuations. We're going to talk about why is Warburg Pincus selling. If you guys missed the first part of this interview, I'll place the link in the description, but we talked about Converge ICT's backstory, what made them so good, why are they growing rapidly, what is their unique selling proposition. So if you have not watched that yet, you can reference the video in the description below. So without much ado, here's the second part of this video, and I hope you guys enjoy this and I hope you guys learn a lot from this video as well. If I'm an investor, what are the potential risks also for the business as of right now also that that you have probably mapped out?
I would highlight, obviously, we have such a fast growth, unprecedented growth, that we need to have the right platform to fully support it. And I mean, we've seen that in terms of the last few months, we were not fully delivering the service quality in terms of the time to installation, responses to customer inquiries, customer complaints in a timely manner and in a service quality level that we are striving for and that we've been able to achieve in the past. So it's very important that we balance growth together with the best quality for our customers.
Yeah, and as you can imagine, Marvin, the pandemic was a black swan event, right? Unless there's another black swan event, I totally agree with Matthias, with what Matthias said. And, you know, the advent of the ECQ was a double whammy for Converge. So we have our expansion program. Expansion is not just rolling out, no, it's expanding the call center, expanding installation and repair queues. Suddenly that all got put on hold. You know, the ECQ was a strict lockdown. In fact, in the early weeks, there was totally no mobility. Good thing the IATF came out with a special, you know, utility pass, and then we were able to start moving. But during those March to June 15, totally impossible to hire people. We didn't have enough people, and even the people we had, not all of them could come to work. You believe that I had 100 call center agents living in our office for those 2 months. So that we cannot afford them to go out because they might come back with an infection, right? Then volume exploded. So now you have more customers than you expected, and then not enough people because of the lockdown. But since the lifting of ECQ, June 15, we moved quickly. In fact, we've doubled our call center seats already. Since then, our installation capacity has already more than doubled, and the objective really was to, you know, to triple it by around November timeframe, at which point we should go back to the steady state that, you know, we used to have. And as Matthias said, a lot of work on the digital transformation. We launched the beta version of our mobile app, so customers can see bills and pay already online. Next step is, you know, self-diagnostics. When they load it, it will tell them the state of their modem. If it's no good, creates a ticket. Lots of work going on because you cannot just throw people at the problem. You know, if you do that, you'll get bulldozers. So we're doing both, no? So we are expanding the physical side of the expanding physical side and working hard on the digital side. So that's the main risk. But again, Converge is a bit unique, no? Because we don't do 100% of anything. We always like a hybrid approach. So we have our organic, meaning, you know, our own teams, our own employees. That's what carried us to the pandemic because these were employees. And we're also outsourcing now, like the call center. We doubled it by signing 4 outsourcing contracts. And again, they are still delivering more people as we speak. Same thing with the installation. Repair, we only do it in-house, only employees. So again, that's something that we're expanding. We like repair to be in-house so we control it.
I'm so curious about this. Looking at some analyst reports, one of the things that stood out while I was looking at it, your receivables from 2017, 2018, 2019, the days have increased more. Can you give some insight into this, or at least some clarity also?
There are a few points here, Marvin. One is obviously the total amounts of the receivables. As we are growing the subscriber base, as we're increasing multiple folds, obviously the receivables also naturally are increasing. But then during the pandemic, and if you look especially at the first half 2020 numbers, the government mandated not only telcos, but all the utility companies to extend the bill payments during the ECQ. That's why in the first half 2020, you have quite an increase in the receivables. We expect that to normalize again, post-pandemic. But we are very, very focused on this, on the management of our working capital. We are the only operator in the Philippines that is collecting a 1-month security deposit from customers to make sure that people that subscribe with us can pay for our services. We have, for example, installation fees that we also are collecting. So it requires a certain investment for the customers to sign up with us. So that's the first, you can say, credit check that we are doing. And then if you look at our churn rates, they are very, very low, 0.7% monthly churn. So once subscribers sign up with us, they typically stay with us. And especially now in the pandemic, people don't want to lose their services. So they're obviously naturally paying for it. So I think that's one point. And for those of you who are doing a lot of research and looking at our at our financials in a lot of detail, you may see that in 2019, the provisions for the accounts receivables have increased quite a bit. It was 2.5% of revenues in 2018, and then it went up to over 5% in 2019. So that's even pre-ECQ. This is really due to a change in our accounting method that we introduced under PFRS 9, a so-called accounting credit loss model, which is a much more conservative way to do the provisions for the receivables, which we introduced in 2019. So that's not a change in the operating environment, but more of an accounting method change.
I saw it in your prospectus, the numbers of percentage of subscribers that you retain. But I just want to know, what do you think is the main factor why your subscribers choose to stay with you as well?
When we look at one metric we track, which is what we call the incident rate, we actually have a very low rate of customers encountering an issue. Previous to the pandemic, in fact, it was just below 1%, meaning one customer out of 100 could have a problem, and not necessarily a problem, but something they have to report. Now we're at 0.7. But the thing is, again, as Matthias said, similar to the receivables, because of the sheer volume of customers, a small percent of a huge number would come out to be very high. Customers are actually very happy. It's very seldom that they experience a problem. We work very hard to ensure the quality of our network, and our value for money is still unmatched. So, customers are really going to have to think twice about, well, do I have any major issues? Not really. I enjoy a great service. Yeah. And the alternatives are not really, that great, In a survey conducted by Nielsen, it was validated. Customers of Converge, very loyal. They're up to 8 times less likely to switch. And that's largely because of the very high customer satisfaction that the mass base is enjoying.
I have a question on this, and you talked about competition as well. First question is, how low can your ARPU go for expansion to be valuable? And do you think, as this rolls out more and more in the next few years, do you think there will be a price war between all of the other with your competition as well? Or do you think it's the market is so broad that that's still years off from happening?
During our last formal update, up to 30% of our customers are still on cable, where the price points are between 1,000 to 1,300 pesos. Fiber, our lowest price point is 1.5, and that's 70%. But in the recent months, the mix of customers that are onboarded using cable are getting to be in the single-digit percentage term, which means to say, over time, majority of the customers will be on fiber, which comes at a higher ARPU. That alone naturally will grow our ARPU. Number two, we do have higher speed plans also, by the way. And, we also have very innovative add-on plans, which competitors haven't copied yet. For example, you can go to our website and buy this add-on package. 10 megabits cheaper than a Starbucks coffee, 99 pesos. As of yesterday, 17% of our entry-level customers have already availed of it. So that's like easy money now. And we will be launching some more innovative products in one of them by December. We haven't seen a similar thing in the world. Based on our marketing studies, customers are very likely to take it up, because one of the things we do is to aggressively upsell customers. But some of them says, well, it's a big jump from 1,500 to 2,500. Give me something in the middle, better than the competition. I'll buy it. Okay, and we will be launching that soon.
And as you say, Marvin, the market is so big, that even for the competition, it doesn't make a lot of sense to drop the prices, because it's a market where also the PLDT and Globe, the incumbents, they will need to serve more. And this is by building out more, not by dropping prices. That's not what obviously everybody is happy if it's cheaper, but at the end, what you want is a product that works and a quality product. And the approach that we're taking is that we're using also this youngest network to give the best speeds to our customers. Going forward, I think we have a lot of flexibility to serve higher speeds to our customers. And we're just at the beginning. The beauty of our network is that we can easily scale it and expand it at low capex or no capex, actually. We can give our subscribers more bandwidth by maintaining or slightly increasing the prices. This is different from legacy operators that are still on ADSL or other technologies. They cannot just give you more speed. That doesn't work that way. They need to basically do what we're doing, building out fiber, but we're just doing it so much faster than they are. If you look at our numbers, we were in September, we rolled out 173,000 ports. So those are these elements in the network where we connect the subscribers. PLDT did 167,000, not in September, but in the first half of this year, in 6 months. So we are the Ferrari on the street when it comes to fiber rollout.
The bent of competition is not really to drop price, but really to add more value. That's why they try to do bundling. And obviously, as Matthias was alluding, all of us will increase the bandwidth over time. And just to be precise about what our network can do, we use a technology called GPON. GPON, actually, the fiber to your home is running at 1 gigabits per second, except that we configure it, let's say, for 25. So when we say, okay, we want to double your bandwidth now to 50, we don't have to do anything physically. We just change the profiles in our billing system, and boom, everybody gets double the bandwidth. Zero capex to us. And one more thing I'd like to add, since we are the beneficiary being new, our average network age is just over a year old. So we were able to buy the latest and greatest. Our boxes, we can take out the GPON card, the 1G card, as I mentioned, 1 gigabit, replace it with a new card called 10 GPON, which is the upcoming. It's not a major capex anyway, so we don't have to forklift anything. We just change the card. We, increase the bandwidth 10 times. So similar to Singapore, actually, if you look at Singapore, our price point is about the same, nearly 1,500, except that Singapore offers 1 gig, right? Go to Malaysia, we looked it up. Malaysia is around the same price point, except that they offer 100 megabits. So that's one way also that we will progressively increase revenues by adding more bandwidth to the offerings, because customers need it anyway. By the way, if you bought a 4K TV lately, if you do a lot of Netflix, oh my God, one 4K stream, it's 20 to 30 megabits easily. So 25 is not going to work.
Everybody thinks telecom is the same. You look at PLDT, Globe, and Converge, the same companies. We're totally different. Wireless is a technology where it's much more capex intensive. You have 2G, 3G, 4G, 5G. Every 4 or 5 years, you need to change the antennas, need to do massive investment to upgrade the network to cope with this expansion of data. In fiber, this is a technology that has so much additional expansion that you can do on the fiber that you lay in the ground without incurring much more capex. As Boboy mentioned, just by changing a few elements in the network, these cards, which are at very low capex, you can massively increase the bandwidth of the network. So it's much more capital efficient, and we don't have this competition and the new iPhone comes out, operator B gives me more subsidies, so I'm switching to operator B. That's not how fiber works. And that's, I think, very important to note when you're thinking about the valuation of the businesses. Fiber businesses and wireless businesses have totally different valuations. If you look at Hong Kong, for example, a company that's very similar to ours, HKBN, Hong Kong Broadband, we love them. They're the best in Hong Kong. They have lower growth than us, but they are very focused on the quality of their service and the capital efficiency like us. They're trading at 10 times, 11 times EBITDA multiples. You look at the wireless players in Hong Kong, 5 to 6 times. And then that's only one market. In Europe, US, you have very similar examples. So fiber telecom companies are very different from wireless or incumbent telcos.
We like the growth of Converge. We like the story, but at its current price, it seems a bit in the premium, or it seems a bit rich. Any comment on that, or any insight that you want to share on that particular item?
I really would encourage everyone to look outside of the Philippines, because we're a first in the Philippines. You cannot compare us with PLDT and Globe. Look at pure play fiber companies in the region. There are some in Asia. I mentioned Hong Kong Broadband. In Malaysia, there's another company, time.com. And you will see that these are trading at very different levels than the big incumbents. And again, I think important also for telecom businesses, these are valued on EBITDA multiples, not PE. I know in the Philippines, everybody is very focused on PE. Our business comes with a lot of capex, so you need to look at it on an EBITDA basis. And on an EBITDA multiple basis, our valuation is very similar to HKBN and time.com, but at a much higher growth and in a market that has much more potential.
I always look at also when companies list the primary shares and secondary shares that are sold. And a lot of people have been asking this also. Why is there a lot of secondary shares that are being sold? And why is an early investor selling their shares? Can you help clarify this to a lot of people as well?
Marvin, thanks for asking, because we have heard also a few comments in the last weeks, and I think there's a lot of misunderstanding on that our current shareholder, the PE company Warburg, they are exiting. They are not exiting, they're staying. What's happening is, as I mentioned, there is a government mandate that we need to do an IPO by next year, by 2022. In the Philippines, there is a minimum free float requirement. So you need to list at least 20% of your stock. So what we've done is we built out the model for the next years to see how much money do we need to raise from the capital markets. And then we, based on the business plan, we came up with the primary stock, which is a third of the offering, about 10 billion. This is more than enough to fund our expansion, because we have very little debt. Our leverage is very low. So if we would take more money from the markets, then basically we would be overcapitalizing ourselves. We don't want to do that. So we want to get the right amount. That's about a third. And then you need this other 2/3 to come from a secondary portion to make sure that you fulfill the 20% free float requirements. And that's when Warburg said, okay, we will help you. We will sell that a portion of our stock to fulfill the requirements. So this is not an exit event for Warburg. This is a financing event for the company. And Warburg will say, our largest shareholder, largest institutional shareholder after the IPO, they continue to have a board seat. They're very involved. I think if they had a choice, they would not sell a single stock. But given these requirements, they need to facilitate the trade.
Any final words to Filipino investors watching this?
Converge is very unique. It's a company that is in a hyper growth stage in a market that is totally underserved. So the demand is there. And we don't even have to win all of the business to continue our hyper growth. If you compare the 2019 and according to our official, update of our first half results, our subscriber base has grown more than 50% already, and our margins have expanded by 67%. And at the pace that we're adding customers, you cannot really look at, okay, it was like this in 2019. 2020 is going to be totally different. As we expand our footprint, we open up more markets for ourselves, and very clearly, we're confident that we can continue our hyper growth. So, every year, for example, this article says, we're like 54 times. After we double our customer base, then, maybe what? It's 27, 30. And, 2022 would be another story. So then we get back into, what would be a more normal. It's very difficult for people to understand that we are a recurring revenue business, meaning our revenues are guaranteed. And every month we add, tens of thousands of customers. So therefore, our every month that we add customers just adds to our revenue, stable revenue growth. And you cannot compare us to some incumbents who are just growing on a single digit basis.
Very strong growth that is visible and that is based on an infrastructure like need for a product. So it is not a nice to have, it's a must have, which is supporting our strong growth. And it's not like an online game company that is a hit or miss and it might pop up and go down again. This is really a business that have very fundamental strong growth based on an absolute requirement, not only now post-pandemic, but for many, many years to come. I think we should have a very that's really what we're trying to do here, is to grow together with the Filipinos as the new fiber platform, the new digital platform for the country. And so we hope we will have a lot of friends in terms of happy customers, but also happy investors.
To everyone watching this, I hope that this gave you enough information so that you can decide on your own. And I say this all the time, the biggest way for you to do well in the markets is you invest on an informed decision. Never buy a stock just because you heard someone on YouTube or you heard your friend buy it. You do your research, look at the numbers, and you diligently invest based on the information that you have. Congratulations to all of you, to everyone in Converge. This is something that's very, very exciting also to see you guys list at this particular era we are in. And I hope that you guys also do well, because I really believe that the internet infrastructure is everything right now, and Filipinos need it at such a time as this. So thank you so much to everyone. And if you have questions, by the way, guys, just put it in the comment section and then we'll try to see how we can make new content off of that. So thank you, Matthias. Thank you, Boboy. And to everyone, I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.
Thanks, Marvin. Thanks, everyone.
We at Converge ICT believe that Filipinos deserve the best connectivity. And this has been our sole purpose ever since the founding of our company. Converge ICT is the fastest growing pure-play internet provider in the Philippines. Our vision is to provide high-speed, fixed broadband internet to the millions of unserved and underserved Filipinos nationwide. Using modern technologies and engineering such as horizontal directional drilling and micro-trenching, we have built thousands of kilometers of fiber network, making it one of the most extensive in the country. With reliability and resilience, we strive to deliver our promise. Our experienced management, differentiated product offerings, and strong value proposition enable us to meet and exceed customer demands. Our residential business has grown tenfold since 2016 and continues to rise. And our enterprise business, composed of large-scale enterprises and corporates, continues to flourish, including more SMEs. Therefore, we have been consistently delivering industry-leading revenue growth. While we value our growth, there's more to what we do. We always ask ourselves, When is fiber internet more than just internet? When people get to create unforgettable moments. When the internet is used as a force for good, as a tool to help build a nation, or to help save lives. These moments give us purpose and keep us driven. We continue to grow and expand beyond Luzon, targeting a primary loop connecting Visayas and Mindanao. Our network has reached millions of homes in hundreds of locations. In 2019, Warburg Pincus, a leading global private equity firm, made a significant investment in Converge ICT to accelerate our nationwide expansion plans. Today, we have become the largest high-speed fixed broadband provider in the Philippines. And our purpose remains to provide reliable and affordable internet for each and every Filipino. We are Converge ICT, and we're inviting you to join us as we continue to uplift lives through meaningful connectivity.